Welcome back, Tech Stocks and Jobs, episode 136. This is going to be a long episode. I'm telling you now. Uh, get your pen and paper. I got a lot to talk about. Last night, I didn't find nothing that I wanted to talk about. Then this morning, I did a different type of search and I found a whole bunch of stuff that I want to talk about that I could talk about last night, but I did. I just didn't find nothing. I was looking. I was like, should I do court cases? I don't know. Mm, just didn't find nothing that I would be like, yeah, let's talk about that. I didn't find nothing. We got work to do today though. We got so much work to do today. Y'all gonna be mad with me today. I hope you got your pen. I hope you got your paper. I hope you ready today. Miss Phoenix, shout out to you. 21 months you've been rocking with us as an earner. Good afternoon from Toledo, Ohio. Right? 300K earner. That's right. Take your break, but never stop. Take a break, but never stop. A break and stopping is two different things in my mind. In my mind. We're going to talk about some stocks. We're going to talk about some jobs. We're going to we're going to talk about some jobs. You know I'm talking about jobs that pay. You know I'm not talking about baby steps like Ramsey. Baby step jobs. We ain't talking about them today. There's no, it ain't saying there's no room, but we're just not gonna talk about them today. Just not. We're gonna talk about some investing. We're gonna talk about where some of the markets are going. We're gonna a lot of stuff. I'm pulling it over now and I'm looking at it and I'm like, man, I don't know if I'm gonna be able to get through all of it. I don't know if I'm gonna be able to get through all of it. Tone all day, what's going on? How are you? How are you? What's going on, and B, what's going on? Zoe, what's going on? D, what's going on? If you are not subscribed to Women in Linux, you should subscribe now. You should hit the notification bell. You should join the Slack. You should meet up with us on Wednesdays. If you're not doing that, you're gonna always be losing because you're gonna always be the last one to hear about stuff. Everybody is like, "Oh my goodness, we gotta talk. We gotta have Rust." I talked about Rust 3 years ago. I went back to the Slack channel and looked at it, and I was like, "I was talking about Rust 3 years ago. I told y'all it was coming. No one believed me. No one wanted to. No one wanted to hear what I had to say." I went on Clubhouse. They was arguing with me like, "I don't see jobs. All I see is Python." I'm like, "I'm telling you, learn Rust now, especially if Rust is going into the baseline of Linux. Learn Rust now." If you missed Monday's show, I talked about uh, Linux being in the global market being a $15.67 trillion market. I talked about it. If you're not looking what I'm putting out, and you just come to visit and you don't take action, that's on you. But I'm telling you, where I'm seeing market go, I'm sitting in meetings. I'm like, oh, let me write that down. Let me make sure I go look that up. Where's that going? Who over there? Who the players over there? How can we get people over there? How can we get people over here? So many different lanes. Automotive grade Linux. So many different lanes. You said you thought about you when I saw folks on YouTube started to talk Rust now. Exactly. Been talking about Rust forever. I'm like, it's going into the kernel. When we see it going into the kernel for Linux, it's going to become the standard. It's the standard. I saw all the quants looking at Rust. When we were bringing Joe on, we were talking about Rust. Like, get it. Everybody's like, no, I don't see any jobs. Only see Python. I'm like, man, look, you can learn Python, but go learn Rust. make you a Swiss Army knife. You could be ahead of the game. Just imagine if people started 3 years ago learning Rust and getting jobs from programming in Rust. Imagine where you would be at now. Everybody is talking about AI. AI. I told y'all before. I was like, listen, AI is cool, but I'm trying to tell you, stop looking at that. Be on the up and up. I'm trying to tell you, go quantum, quantum, quantum. Nobody want to listen. You be ahead of the game now. You'll be winning in 2 or 3 years. You'll be the expert. You'll be the SME. You'll be the subject matter expert. Right now, stay focused on what you got going on at work, but always study something that's progressive forward, like pushing forward 10, 15 years. So that way when it hit, like Rust is hitting now. It's now a national directive from the government. No one realized. So it's quantum. It's a national directive. It's a cybersecurity. It's a national threat to cybersecurity to the United States. Quantum is right. Quantum. Shout out to Acosta. I saw you call me. I was getting ready for the show. I saw you. I'll get with you after the show. Right. Heather, what's going on? Done. Get the book and execute every day. Practice something, like even if you just practice writing for loops and packaging up and learning how to write little small applications. Write a calculator, right, with a front end and Rust, whatever. Do something small, but keep increasing your understanding of it and how it works. But we got a lot to talk about today. I'm still pulling over links. I'm filtering through my links. I'm gonna show you what I have. Right? I don't even have half my links up. I'm just gonna bring this document over that I created. All right. So it's on the screen right now. These are the links that I'm ciphering through. I'm gonna show you. Do you pull it up on the screen? I'm showing you what I'm ciphering through. Look at this. This is all the information that I like when I go through stuff and I'm looking and reading. I'm reading these things. This is look at this. This page 2. Here go page 3, and I stopped because I was like, "No, you're getting out of hand. You can't talk about it all. You can't give it to them all in one day." I say, "No, you can. You can give it to them all in one day. You can do it." So get ready. Let's go. Let's begin. No monologue today. Let's start. All right. So what we have here on the screen, D, take me down because it'll blow it. It's going to skew too big on me, but it'll be big enough for you all. All right. Close that. All right. What we got here is one way. This is on New York Life. This is one way where I go through and say, okay, I'm just looking at ETFs. And as you can see, we're looking at commodities, right? And I can break this up into sectors right here by asset classes and geographical region. So if you want to, like in Schwab or Fidelity or whatever, you could do the same thing, right? You could compare ETFs. But what I'm looking for when I'm looking at this, I'm looking at who's returning the most in these markets, what the companies are, what is in those ETF holdings. And when I say what's in them, I mean what's the majority held in those ETFs. And I'm going to go look at those companies and see what those companies are doing. A lot of research. It's a lot of research. And a lot of people don't want to do this research. But the reason why I'm doing it is because I'm looking to see what they're doing not just in the ETFs, but the companies that are being held in those ETFs, and then what they are doing in those companies to keep going, to keep growing. All right, so let's start with consumer discretionary first. 33 ETFs out of there. All right. So now, as you can see here, is a long list. I'm gonna try to blow it up a little more because it looks really small, but I think you all can see it. All right. So yeah. All right. So you see that there. Now, what I'm going to do is go and click on performance. And now you see 1 year return, 3 year return, 5 year return, 10 year return. I'm focused on 10 years. I tell you all the time 10, 15, 20 years. Let's look out. So let's go here. It switched on me. Let's go here. Switched again. All right. So now I got to bring it back down because you can't see it. Well, maybe I could expand this little side here. Okay. So again, I looked at, if we scroll up, consumer discretionary, you can see here ITB, ticker symbol ITB. iShares US Home Construction ETF in 1 year has returned 44%, in 3 years 20%, in 5 years 24%, and in 10 years it has returned 15.54%. Now the next one down is Van Eck, and that's an ETF. These are all ETFs. So I'm looking like, okay, like if I want to be greedy, if you want to call it that, I'm gonna look at anything really these first two. That's what I'm gonna look at, right? So then if I click on this ITB, ticker symbol ITB, you'll see I get another little pop-up screen here, right? And let me see if I can blow that up. All right, we get a little pop-up screen. Now, this little red line that's going across here is what the S&P 500 has performed, right? And let's go over the 10-year right here. All right, so for the last 10 years, this is what it looks like for the S&P 500 in the red line, and this is what it looks like for the last 10 years for that ETF ITB. Now, I'm looking at the performance of it. So let's take it one step further because we seen the performance of it. Now we can go here and look at it right here. You can look at it right here, and it talks about it right here, what that looks like over the 10 years at 15.54%. But what is in this ETF? And before I switch pages, it also shows right here the growth potential for if I put $10,000 into it, right? If I put $10,000 into it, they're trying to show you what that could look like if you would have put 10,000 in. And they talk about the risk. But now let's go look at the holdings, right? All right. So now when we go look at the holdings, it's 73%, 73.73%. Oh, it's so small. Oh, I hate it when it's so small for you all. Let me scroll up there. All right, so 73.73% consumer cyclical. But if you look in here, you can see the biggest player in this particular ETF is DR Horton. So now, if you really want to, if you're like, I like this ETF, but I don't like everything they got in it. So in this ETF, they got DR Horton, they got Lennar Corp Class A, Pute. And remember, I told y'all about NVR. Remember, I said I was invested in NVR, right? They have NVR in here, right? Then you got Home Depot, Sherwin-Williams, Lowe's, Top Build, Toll Brothers, and Builders First Source, right? And then you can come down here and see like most of their stuff is in, this is consumer cyclical and industrials, right? Industrials. So if you really wanted to, you could go out and look at just DR Horton if you wanted to and see what they're returning. You can go on Google Finance or Yahoo Finance or whatever you decide, and look up DHI, right? And look up DHI. Put a one in the chat if you're keeping up with what I'm thinking about or what I'm looking at. And does this make sense to you? If it don't make sense to you, put a two in the chat, right? Put a two in the chat, right? So then they also have the ratings and the risk of this one, right? They'll have the ratings and the risk of it. They also give you the performance of it, right? I can go quarterly and show what the quarterly uh, is on this, right? Well, what I'm looking at, I want to look and see one, what the management fee is. The annual return for 2023 was 68.83%. Now, what am I getting out of this? Well, we know there's a shortage in housing, there's interest rates and so forth going up, down. I'm looking to see what the housing market is looking like. What am I seeing in this? Is this something I would want to invest in long term? Right? Long term. They're saying, hey, if you would have put in basically this, I guess I'm assuming this is probably the year, January the 15th, and until January of 2024, uh almost 10 years, you would have been at in 10 years, you would have grown probably looks like about 43,000 there. About 43,000, which ain't bad. You start in with 10, you leave it in there as long as you got a I always like to call it the ramp up. You good. All right, so let's get out of that. All right, let's go back up here and let's look at information technology. All right. Again, same thing. I'm going to resort this by 10-year performance. Now, I mentioned Van Eck for a reason on that last one. Van Eck ETF SMH has returned in 10 years, over 10 years, 26.09%, in 1 year 57, in 3 years 18, 5 year 32. And the next one down is ticker symbol SOX, ETF SOX with the ticker symbol SOXX, and then PSI and so forth. So me, I'm gonna look at really. I'm gonna probably stop right here at the 20% mark right here. Nothing wrong with the rest of these. These are great, 19 and so forth. But we're here like we always talk about. What's your top five? A $5 foot long? I'm gonna go with the top five. Right? Let's go with the top five. All right. So now I'm going to open up Google Finance. And now let's look at this SMH. All right, so I'm gonna bring this over. SMH. And let's look at SMH Max. It has returned 415%. It's trading right now at 220 after hours 222, right? And then you can look at the slope of this, right, from here on up, right? Key events, and it don't look like it got key events on here, but that's SMH. That's the ticker symbol SMH. You can look at it for the 5 year, right? 336.89%. But I wanted to show you that because you can look at these and you can put them on your watch list. And I'm not telling you to invest in them. I'm just telling you how you can utilize some of these um what is the word, brokerage accounts, or trading accounts and stuff, and look at like what's really returning something, right? What's really returning something. All right, so let's go look at SMH. Van Eck. Do y'all know who Van Eck is? Ever heard of Van Eck? Don't worry, I got you covered. I got you covered. All right. So let me get this size properly. All right. So it got created in 2011. Van Eck Securities, market cap 16.2 billion. And now let's look at, it's a passive fund. Let's look at the 10-year. Again, 800%, more than 800% on the return from 2015 to 2024. We go since inception, and you can see it's outpacing the S&P 500. Let's go to the performance of this. We can see here in a 10-year plan, 26.09, since inception, 24.67. And if we go to the holdings, because we always want to know what's in the holdings, you see your friend is in there. Nvidia is in here with the largest share of 22.91%. Taiwan Semiconductor, TSM, at 9%, and AMD, and then Broadcom, ASML, Intel, Qualcomm, and so forth, right? So now you can see what is the major holdings in this. It is 99.97% on stocks. 99 point, I mean technology. 99.97% on technology. You can see where the asset allocation is at, non-US stock and US stock by itself, and some cash, right? But now you can see what that looks like. So Van Eck Semiconductor ETF returning on its performance since inception at 24.67%. Put yes or no in the chat. Would you invest in Van Eck? Yes or no? Ticker symbol SMH. Would you invest? Now, some of you may say no, and I'm gonna tell you why some of you would say no. Some of you would say no because you feel like it's too heavily relied on Nvidia. But they got some, they got some distribution in there. They got some distribution in there. So let's close this out. And now let's go look at SOXX right below VanEck, which is an iShares semiconductor ETF, and it's returning 24.82%. So now let's look at this particular ETF and see what the holdings are. And I could do a comparison here, and I will. Let's do the comparison. Let's utilize the tools that are given to us. All right. So since inception, you would have gotten a return about, look like about 860%. All right. They're comparing it to the S&P 500. I can compare it to the NASDAQ. I could compare it to the Dow Jones. Right. NASDAQ composite. So NASDAQ composite at some point in time was beating it out, you see. All right. And then if I go in New York Stock Exchange, no comparison. No comparison. So let's go to performance, and then I'll go over the holdings. All right, since inception, 11.12%, but on a 10-year journey, 24.82%. Right? 24.82%. Let's look at the holdings. So this one is a little different. You can see the distribution on this is a little more evened out. They got 9% Nvidia, 9% AMD. They're not so heavily dependent on how Nvidia is performing. It's a little more even distribution. And that's what I wanted to show you. When you're looking at some of these ETFs, you may want to look at how much heavily they're relied on some of the different holdings in within that ETF. Now, not to say they can't recalibrate. I'm just saying at this point in time, this is the weight that they got set up for this ETF. So you can see there, you don't see ASML in here like you saw in the other one. You see AMD, you see Nvidia, Broadcom, Qualcomm. They got Marvel Technology. Oh yeah, you do. That's ASML, and then Micron, and then Applied Materials. Right, 99.83% technology. All right. So let's close this. Oh, log me out. Thank you. I need to log back in. 1 second. Let me get logged back in and log me out. But so far, does this make sense so far? I mean, I hope it does, so you can get a chance to see how you can utilize some of y'all brokerage accounts to look at holdings, to do comparisons on ETFs. What's actually returning the best in terms of like what you want to invest in. And some of you all probably won't ever invest in the ETF. You probably won't even play in the stock market. You probably won't even play in the stock market. I wish you would, so you could, I mean, even if you just put in $100 a month, you know, that I would take that. I would take that. All right, let me get back to this link. I'm logging in now. Let me get back to it, and then I'll bring it over. I think it was stock screener. No, that's not it. Oh, here it is. Overview. And then I have it back up. Let me close this screen. Let's bring this back over. Okay. All right. So let's go back to our technology one. Well, no, let's go to utilities. All right. And then let's see, they only got management fee, performance. Come here. Go back and do it again. All right. So now you can see when we get to the utility section, we're down at the 8%, this, that, and other. Let's not go there. Let's keep it big. We're gonna boss it up today. All right. So now what I can do now is I could take uh these three right here and I can compare ETFs. Okay. So I took the top three and now I'm comparing these ETFs, right? And you can see the date of inception, technology. You can get the overall ratings of those ones. You can get what it looks like for the 3 year, 5 year, 10 year. You can get the report of all of them. Let me blow it up a little bit more so you can see that. Yeah, that's okay right there. I'll just slide this over a little bit so you get all of it on the screen. That's a little better. And you can see the ratings on them. You can see the average. You can see what it returned over if you invested. See growth of $10,000 invested 5 years ago or since inception, right? 5 years ago or since inception, and this is what you would have gotten back with those three, right? You would also get the volume in it, the number of shares. And here's you. This is when it. And I was looking at this, and I have to do. I'll have to look at the alpha of this. We'll have to look at gamma and alpha. But here we start talking about the standard deviation, the beta, the R squared. Well, I'll have to get into that on another session. But I just wanted you to see like what is out there as far as technology goes, Van Eck, so forth, ETFs, how to compare them, how to take your, again, when you get that sign-on bonus, don't take the sign-on bonus and go pay off your bills. You could take 10,000, and if you would have just invested it in five and let it sit there for 5 years, you could have got a better return on your money than taking it and paying off your bills, right? So that's why I always say get your sign-on bonus, make your sign-on bonus work for you, right? Make your sign-on bonus work for you. All right. So I'm gonna leave that over here because we may have to go into that. But here I've been talking about data centers. And then here's one right here. Expansion of data centers can help propel REIT ETF. This one is called the apps active REIT ETF. We can look this up, but let's talk about it for a minute since we're on the lines of ETFs. As the world, I don't know who this is. As the world gets increasingly reliant on digital technology, the build out of infrastructure will be a necessity via data centers. Now, I keep talking about data centers. I don't know why people keep avoiding those things, but I'll keep talking about them. Right? That growth is boosting stocks like Equinix and ETFs focus on real estate investment trusts like Apps Active REIT ETF. Equinix constitutes 10% of the REIT's allocation. Therefore, the real estate company will have a tangible impact on the performance of the fund. The company's focus on data centers, its growth trajectory is promising. Equinix reach its global and with recent expansion into the continent of Africa. It says listed Equinix, NASDAQ listed Equinix will invest $390 million into Africa over the next 5 years, building data centers and expanding the current operations in South Africa and in the West continent. Now, if you thinking how I'm thinking, if we building over there Africa data centers, that means somebody got to work in them. That means somebody got to have a place to live. That means a lot of things. And with the global, with the entire continent, for that whole, I don't know if you remember this, the whole pipeline, the whole internet pipeline that's being set up around Africa to get internet and data centers into that region, you should be looking at who is who and what is what, right? Who's the big players in that? When I talked about that, let me look at this internet pipeline into Africa and data centers. All right, so let me go to images. It was a whole, yeah, right here, something similar to this. Data center service providers head to Africa. This was in 2022, but this right here is what I was talking about. The whole pipeline that's being put around the entire continent of Africa and feeding into inwards into the country. Again, when we're looking at this, we're talking about data centers, we're talking about real estate, we're talking about minerals, right? We're talking about minerals. And we're also talking about in this too. You're talking about sustainability. So that also means water and food, right? Water and food. It's a big play when we're looking at this, right? It's a big play when we're looking at this. All right. Adding digital infrastructure to Africa will be a critical juncture in expanding the use of internet technology to the masses. Developed countries are accustomed to services like internet, but certain parts of Africa are still trying to catch up to the digital age. So, build out of data centers by companies like Equinix would be great for assistance. The California based data center operator is also pursuing opportunities in East Africa and will potentially spend more to build or acquire their recently appointed managing director for South Africa, Sandil Dube, will said in an interview. The global reach of Equinix can already be felt with data centers in Asia Pacific, in particular the countries like Australia, China, Hong Kong, Japan, Korea, Singapore, and now Malaysia, India, and Indonesia. With holdings like Equinix REIT can capture opportunities in real estate market outside of residential and commercial real estate. This approach to nuance corners on market real estate will make the fund flexible and challenging in a macroeconomic environment for residential and commercial. Digging into the REIT. Of course, one attractive feature of the REIT is the fixed income opportunities. REIT has a 30-day SEC yield of 3.61%. And this REIT can help supplement a fixed income investor's portfolio. It can help get potential price appreciation from the real estate market. You don't have to go buy real estate. You can just invest into REITs on the side in order to do if you want to be into real estate, right? So apps. You can go to appsfunds.com for this, and also look up, if you just type in REITs, if you type in data center REITs, Seeking Alpha, there's a whole slew of them out there. I did a show on it a couple of times on that. Let's continue. All right. Quantum computing stops to turn $100,000 into a million. Before we get into that, because a lot of people are like, why are we talking about quantum? Quanta. All right. Let me pull this up. I'm on my notes, so let me get this. Yeah. Hold on. Let me pull it over. And we're going to talk about it. Our first one. No thanks. Yeah. All right. Organizations urge to act on quantum cybersecurity threat now. Large language models and generative AI can help rebuild cryptography, says Zscaler's Sam Curry. Is it Curry or Scurry? Curry, yeah. All right. Quantum computing promises to open the door to boundless innovation, but also threatens to effectively change and compromise the contents of all public and much symmetric key cryptography. Indeed, one of the things that was said about technology during this year at the WEF conference was quantum computing could start a cybersecurity Armageddon. While Armageddon smacks a hyperbole, or I guess a hyperbole, the warning must be heeded. So, how should today's leader focus on getting their businesses quantum ready in 2024? They go through this in this conversation here, but wait, there's more. Wait, there's more. I don't want to read all of that because I got others. I got so much other stuff. All right. The U.S. think tank warns nation in falling behind in quantum tech. The U.S. think tank has warned about the military use of quantum technology and the threat it poses to digital security, given China's significant investment in that area. This is a whole article on this. This is a whole article on this. They only got this little piece, but you got to go and join and get the rest of the article. And I didn't want to do that. So let me continue because wait, there's more. Let me grab this because everybody's focused on cybersecurity, but what area of cybersecurity? Quantum Computing Research Report 2024. Private companies lead the way in the US, while in China, expertise is increasingly concentrated within the state institutions. The K through 12 program that has been created here in the United States is great, but if nobody can implement it and nobody can help with it and nobody is teaching it, it don't make a bit of difference. Quantum security, AI is great, but again, quantum security is going to be the wave. We already are using quantum in space. We're already using blockchain in space, but quantum security is going to be very huge, right? So again, here, quantum computers use the properties of quantum physics to store data and perform computations. There are many technologies with the potential to build their foundational quantum bits. However, it may well be over a decade before companies can deliver the enmeshed systems of high fidelity qubits needed to usher in quantum era. The fiendishly difficult engineering problems, excess hype, and pre-revenue phase for many quantum companies mean a protracted quantum winter is in prospect. China has made enormous strides in catching up with the US in 2024. The two countries stand almost neck and neck, I'll bet with very different strategies. Private companies lead the way in the US, while China expertise is increasingly concentrated within the state institutions. Alibaba and Baidu have notably withdrawn from the market, dedicating state of the art equipment to China's national institutions. It's a national institution. If you go look at the Israelis, their thing is security. Back in the day, uh, big data was a thing for Indians. You look at a lot of countries, they have an initiative in technology where the whole country learns it. We do not have that initiative here. We don't have an initiative where we say we declare that the entire country will be working in quantum. So start putting it into public schools and everybody's going to be quantum engineers. We don't have that. We don't do that, right? We don't do that. Right. The next few years will see progression of noisy intermediate scale quantum NIQS devices and development of modular systems, each generation incrementally more powerful and less fragile. All right, so let me get down here to the companies. Let me see. All right. I think this is a report. Within the next 5 to 7 years, intermediate quantum computers are likely to become available that can offer quantum advantage over classical computers in certain optimization applications across, for example, space warfare, logistics, drug discovery, and options trading. This report will help you understand what quantum computing is, its impact across industries. It also also includes details of companies leading and charging the way towards quantum supremacy. Here is everything that is listed in that. Here are the companies that are leading the way: One Qubit, Accenture, I guess AE AEG, AGIQ, Alriro or Alero, Alphabet, Alpine, Amazon, and none. And then they have them all in order. It's a lot for me to go down and list all these companies here. I could go on forever, but you get the drift of who are the players. And when I say who are the players, meaning these are companies that are looking to hire people right now and do work with these types of things right now, right? To be world competitive, let alone world leading in technology. Yep, yep, yep. We have to develop a class of quantum engineers, and we could take when I say we as us could take the lead on the next generation of being either quantum adjacent or in quantum engineering itself, understanding it and putting ourselves in position where those kids that are coming out of elementary school and going into high school will already have their tracks and stuff laid out. They would already have connections in the industry from the seventh grade because they will already be attending and working with people in higher education, and then they can mark and see themselves. And on top of that, they will already have a network. So we could literally take the lead on that. The stuff is out there to already do it. You just got to be willing to put in the effort to do it. I have this article. I don't want. I'm gonna have to read this article another time. I'm gonna have to read this article another time. But let's get into this one here. Still quantum based. Still quantum based. So, quantum cryptography markets to secure USD 22.7 billion by 2023. I mean 2033, right? The quantum cryptography market is positioned at the forefront of cybersecurity innovation, still small, leveraging the quantum mechanics to fortify the security of digital communications against the most sophisticated cyber threats. With a projected market size of 1.8 billion in 2024, This sector is anticipated to grow by 32.13%, reaching 22.7 billion by 2033. This remarkable growth trajectory is underpinned by the escalating prevalence of cyber attacks and increasing demand for next generation security solutions across various sectors, including IT, telecommunications, BFSI. I have no idea what that is. I have to look that up. Government, defense, and healthcare. The market dynamic landscape is shaped by several key players: Quintessence Labs, Crypto Labs, ID Quantique, Magic Technologies, NewCrypt, who are at the forefront of driving quantum key distribution and other quantum encryption technologies. Recent developments in the field have significant partnerships and so forth, right? So they got comparative insights and so forth. And here is the global quantum computing cryptography market. They have hardware and software when we're looking at this and what that looks like over the next 10 years or next 9 years. I expect this to change. I don't expect this to be the same. I think this is going to change as well too. Here are some key takeaways and so forth right here. Please note, Arquit, a company specializing in quantum encryption solutions, achieved a market capitalization of 1.7 billion in 2022 after going public in 2021. China leads in quantum cryptography patents with over 4,000 applications reported by the World Intellectual Property Organization, WIPO. According to the Survey and Cloud Security Alliance, it's projected that 66% of the organizations will adopt a quantum safe cryptography by 2030 to mitigate threats. So those that are looking at AI right now, you might as well go ahead and start getting ready for quantum, and you better start looking at who can supplement in terms of school, because that's going to make you the leader. That's going to put you ahead of the game. I'm just trying to keep you ahead so you don't fall backwards, right? The U.S. Department of Energy has granted 74 million in 2022, and they just did another 45 million in total. They're putting in at least 100 million into quantum computing alone from the Department of Energy, just the Department of Energy. Do you know how many different agencies there are? There's a minimum of 21 different agencies, and every one of those agencies has a quantum play, right? North America leads quantum cryptography market, holds a 31.6% share in 2023, driven by robust technological infrastructure, research and development activities, and collaborations between academia, government, and private sectors. Oh yeah, network security emerged as the dominant application segment, accounting for 53% in 2023. In 2023, the government and defense segment held a dominant market position in quantum cryptography market, capturing more than 36%. When we talk about cyber shares, right? Here's the trends that they talk about here: transition of quantum resistant cryptography, global standards and governance for post quantum cryptography, standards and implementation, guidance for migrating from post quantum cryptography through CISA, NSA, and NIST, formation of post quantum cryptography alliance, right? The list goes on. This is a long article. It's a long article. It's a long article. I'll probably have to do like a quantum day to really talk about this here. All right. So here we go. Here. I really went ham on a lot of the quantum stuff, so make sure I drill it into your head. Of stuff I found. The White House Roundtable on Quantum Computing and Cybersecurity focused on post-quantum cryptography migration. This came out on the 14th of 2024. This comes directly from the White House. There's probably a video out there that we could probably go watch. I prefer not to watch it on here, probably watch it in the background. But this is, again, a White House Roundtable on quantum computing and cybersecurity, right? a White House roundtable. Um, here, um, come on up. The impact of quantum computing on cybersecurity. This article talks about uh, quantum attacks, quantum threat modeling, QKD, rapid password cracking, blockchain and cryptography vulnerability, right? Discussion of digital signatures, right? Disruption of digital signatures, and so forth. Training and creating awareness for cybersecurity professionals. As the cybersecurity landscape evolves, it is crucial to equip professionals with the knowledge and the skills necessary to navigate challenges posed by quantum computing. Training programs and initiatives to create awareness should be established to educate cybersecurity professionals about quantum safe practices. This includes the principles behind quantum resistant encryption, identifying potential vulnerabilities, and implementing effective measures. The cybersecurity community can adapt to emerging threats by fostering well-informed workforce. So if your cybersecurity company or boot camp or whatnot that you all are going through or just getting you ready for right now, you already gonna be behind. You need to find you may need to supplement what you already are learning in those boot camps with some stuff from quantum computing. The national security, this came out in 2022, so you all know I'm not crazy. You know I'm not crazy, right? The National Memorandum on Promoting United States Leadership in Quantum Computing while mitigating risks to vulnerable cryptographic systems. It's a briefing and a statement. It is all here. It is coming, the memorandum from the Vice President, the Secretary of State, the Treasury, the Secretary of Defense, the Attorney General, the Secretary of Commerce, Energy, Homeland Security, the President and Chief of Staff, the Director of Management Budget, the Director of National Intelligence, the Central for Intelligence Agency, the President of National Security Affairs, the Council, the Assistant. I can go on. It is everybody. I'm telling you, you need to be aware of these things. Look into investing. I ain't saying invest heavily. I'm just saying be aware of it so you can talk intelligently about the conversation and be involved in the conversation. Don't get passed by. Peanut investors, shout out to you for the $5 super sticker. Maybe a super chat. Let me look. This is a super sticker. All right. I appreciate you. Right? Thank you for stopping by. All right. So let's get back to why we got here. 3 quantum computing stocks to turn $100,000 into $1 million. You know the background of why I focused on quantum computing from that perspective. But now you may not want to do all those things. You may like, Tameika, I just want to invest in some stocks. Okay, nothing about that. We're getting ready to retire. All right, cool. All right, this came out 1 day ago. Potential 7-figure returns with quantum computing stocks. QUBT, quantum computing, specializes in quantum computing hardware and software. We know in 2033, the estimated is supposed to be 22.3 billion, or we just rounded up to 23 billion in 2022. I mean 2033. The next one is IONQ. IONQ, known for developing trapped ion quantum computers. IONQ. Who's invested in IONQ? I don't know. I don't know. I am. I don't know about the rest of y'all. Right? That's my little play. Right? Next one. You've heard of Hewlett Packard Enterprise, HPE, focuses on IT and quantum computing through its intelligent edge. Intelligent edge, right? So here they talk about the quantum computing stocks could realistically turn into $100,000 investment into a 7-figure sum. The quantum computing industry is still very young. Many companies trade at depressed valuations, potentially undervalued. entered in the industry. While it's still early, possesses significant risk and uncertainties, but overall, I feel the industry is more of a sure thing. Quantum computing stocks and related companies are necessary for humanity to reach the next level of quantum of computing power. We've seen a drop off in computing power due to the death of Moore's law. So revolutionary steps need to be taken to reach future breakthroughs. So for investors seeking impressive gains, there are three quantum computing stocks that could turn a six-figure lump sum into a potential 10 bagger or more. And so they talk about QUBT and what the market shares and what they're going. I would tell you to go research any of these. Research any of these. IONQ, go research those. Go look at them. Put them on the watch list. See what they're looking like. Right. See what they're looking like. And then HPE is another one. Go put them on your watch list. Look, see what they perform like. Do some paper trades or something like that, and watch them. All right. Let me make sure I got all my quantum out of the way. I think I did. Yep. I think I got all the quantum out of the way. There's 10 articles. All right. So we're done with quantum. Okay. When I was talking earlier about Van Eck, I was like, do y'all know who Van Eck is? So I went and pulled up their site, Van Eck, right? And let's talk about for a hot second who Van Eck is. All right. The president and chief executive of Van Eck is an ETF trust, right? Van Eck, let's see. Van Eck was one of the first U.S. asset managers to offer investors access to international markets and recognized early the transformative potential of gold investing and emerging markets and ETFs. Let's see. Van Eck. Here we go, right here. We go to Wikipedia. I hate going to Wikipedia sometimes, but it does the job in this case. Van Eck, an American investment management firm headquartered in New York. The firm is primarily engaged in issuing ETF products through although it also deals with mutual funds and separately managed accounts and institutional investors. It was a pioneer of investing in foreign stocks and gold investing. Outside the US, they invest in Europe and Asia. Van Eck Global, John Van Eck founded Van Eck Global, an investment firm that capitalized on growing international stock market, Western Europe to U.S. investors in the wake of the Marshall Plan. His father moved to the U.S. from the Netherlands in the 20th century as an employee of Shell PLC. In 1968, the firm launched one of the first U.S. gold funds, International Investors Gold Fund, and moved most of its portfolio into gold mining. All right, hold those thoughts right there with gold mining. Hold those thoughts right there with gold mining. Let me pull this up for you. Right here. Hold them thoughts right there for gold mining. Let me get this. Because this all ties together. Billionaire investor sells big tech and buys miners. All right. Van Eck Gold Miners GDX, ticker symbol GDX. Van Eck. We talked about Van Eck earlier with the returns, and now we're back at Van Eck again. Does anybody see the connections here? Hope you're keeping up with the connections here. All right, so this is a strong buy, they're saying. Last price at 27.33. Van Eck Gold Miners ETF has declined by 20% over the last 2 months, even in the broader market has soared. However, the leading billionaire investor has been pouring money into gold miners recently while selling some of the big tech stocks. We discussed why they're likely making this sector rotation and implications for the GDX ETF. Put that on your watch list. Just watch it, see what's going on. And then let's I think I still got the thing up. Let me look. Let me look. I may have it still up. Oh, it logged me out. Let's see. DX Holdings. All right, here we go. Right here. Um, 11.37 billion in total net assets. This is the ETF GDX. Been around since 2006. Fund details. I am looking for the holdings. So here's the performance of that. Let me break out a little bit here so I can see. It's a small. This is small. This is not, we ain't talking about big performance. It's small. 2.7 GDX is 2.7 7 GDMNTR index is 3.11. Talking small. We ain't talking big. Let's see, investor type, individual investor. Sure, I agree. All right, here we go. And you can look at total number of assets here. Again, that's the semiconductor right there. This is all of Van X. This is their all of their ETFs. There's that one that we looked at earlier, the semiconductor SMH. I want the gold. You can download this as an ETF. I mean, as an Excel sheet too. By the way, I want to see what other miners that they have. Okay, here we go. They're based in basic materials, 100% basic materials. So I would look and see what is considered basic materials. What is that? Because that's what they're 100% invested in. And you can look at the summary here. They lost 20% over time. Let's look and see what it's been like over the past 5 years. The max in the red here. In the red, they was this 2011. They was hot, and then they've been in the red. So 5 year, then the green. So at $27.33 with a 3% return. You can keep it there. You can go invest in individual gold bars if you want to. But I wanted to pull that up because let me go back over here. Uh, what this sector could look like. Gold mining stocks represented by Van Eck and Van Eck Junior Gold Miners, GDXJ, have been in the doghouse recently, down nearly 20% over the past 2 months alone. All right, the main headwinds for the sector seem to be a growing consensus for higher and longer interest rates, several operating labor strike, sticky inflation, likely some momentum trading factors. It says why billionaire investors are loading up on gold mining stocks. Numerous leading investors are pouring capital into gold mining stocks. This includes Jim Rogers, John Paulson, over 1 billion investment from activist Elliott Investment Management, perhaps most notably of all. A significant move in blue chip gold miners, Newmont, NEM, and Barrick Gold by billionaire Stanley Druckenmiller, who also sold his holdings in big tech giants like Alphabet, Alibaba, and Amazon in the same quarter. Why are these investors, in particular Druckenmiller, pouring so much money into gold miners despite their terrible recent performance? I mean, we buy low, sell high, right? We buy low, sell high. First and foremost, the valuations are extremely important right now. While tech stocks and the tech-heavy S&P 500 as a whole sit near all-time highs, numerous leading market valuation models indicate the market is significantly overvalued. And the S&P 500 to gold ratio shows that the gold looks quite cheap on a historical basis. So I would be buying low now too, right? When you add on to the top of the fact that the two miners that Drunken Miller bought, gold and NEM, traded 18% and 10% discounts to NAV respectively compared to the historical average of 25%, the value present in the gold mining sector becomes even more apparent. The second is the geopolitical forces are creating an increasingly bullish environment for gold between the numerous wars and the threats of war around the world. And they got a whole thing. The growing momentum, particularly among BRICS, to ditch the dollar and adopt gold as the global medium of exchange. The soaring record level demand from central banks for gold in recent years. There are numerous geopolitical tailwinds for gold prices and by extension, gold miners. Last but not least, the macroeconomics or economics forces are also painting a very bullish picture for gold prices and gold miners. Yes, there are growing consensus that the interest rates will remain higher for longer. However, it is also broad consensus that the Federal Reserve rate hiking cycle has peaked and that its next move will be likely to cut the rate hike interest. Gold and gold stocks have massively outperformed during previous periods during the Fed rate hiking, so there's a reason to believe that will do so once again. Moreover, gold has historically outperformed the stock market during economic periods of weakness and leading recession indicators showing a very high risk of recession hitting the US in the near future. It is least prudent to consider this possibility if not probability. So how many of you all will invest in a gold ETF? It's 27 bucks. 27 bucks. I'll probably buy one this afternoon. See, you could buy 100 of you could buy 100 shares, 2,700 bucks. Gold ETF. Van Eck. Now you know who Van Eck is. You know where they invest at. Gold, international, and see, gold, international, and semiconductors. Put them on your watch list. SMH. What's my time looking like? Oh, we're doing good. All right. Microsoft hasn't been worth this much more than Apple since 2023. I mean, since 2003. Microsoft market cap is about 309 billion, larger than Apple. Just 16 months ago, Apple was 719 billion ahead. Microsoft continues to pull away from Apple in terms of market capitalization, so much so that the gap between them is the widest it's been in over 2 decades. Based on the intraday market, had Microsoft is at $3.063 trillion market, while Apple is at 2.754 trillion. If the corresponding stock market action carries through to the close, that would translate into a $309.4 billion margin, the largest between the two companies since 2003. Yeah, you probably get physical gold. Yep. Of course, the picture was much different in 2003. Remember that Microsoft, or we should say Bill Gates, gave what you call it money to keep Apple open, right? So he wouldn't have a monopoly, right? There's a billionaires gonna help billionaires. Money is gonna help money, right? If you help me, I help you. For context about Apple's business, its annual filing in 2003 advanced new digital devices such as the iPod digital music player, personal digital assistant, cellular phones, digital still and movie cameras, CD and DVDs, and other other electronic devices. Apple just decided not to do electronic cars. They just got away from that. They made that announcement this week, right? So again, understand what kings and aristocrats are. Microsoft, you can't lose. Go look at MF. Oh, is it MSFT or MF I think it's MFST for Microsoft, or is it MSFT? I think it's MFST. For Microsoft, go look them up, stay with it, look at it. Where is it going? What is it doing? I'm gonna tell you, and this is not financial advice, but I'm gonna tell you, I think Microsoft is a good play. You can invest in Microsoft. You're fine. All right. This I'll come back to this. This is it's a story behind this. I'll come back to this. All right. SPY. First ETF to reach 500 billion in assets. SPY is the first ETF to reach 500 billion in assets. SPY became the first ETF in history to hit $500 billion in assets under management on Thursday. SPY, which gives investor exposure to the U.S. to some of the U.S. largest companies through a market cap weighted tracking of S&P 500, reached 502 billion in assets under management (AUM) shortly before the market closed on for the day. State Street Capital Corporation, the issuer of the fund, said uh, that you just said the fund, which started in 1993, has been the world's largest asset under management and longtime golden goose for State Street, the world's largest ETF issuer. 500 billion is an incredible milestone of SPY and is indicative of the incredible growth that ETF industry has seen, right? So take a look at that ETF, see what's in it. What is its holdings? You can go down that road for you want to. I don't have time to do that today. All right. All right. So let's talk some numbers here. 150K income is lower middle class in these high cost cities. And people will want to debate about what is considered lower middle class, low income. I don't know why this is doing that. But nevertheless, let's talk about it because people will debate. In today's economy, making six figures is still considered doing quite well. However, new research from Going Banking Rates shows that in some major cities, an annual income of 150,000 is only enough to qualify as lower middle class. You would fight me and debate me and say, "Oh, but out here in New Texas, $100,000 you can have a mansion. We only got a town of like 75,000 people. We just put up our first. We just got our first Chick-fil-A." And then I said, "Well, what's the demographics in New Texas?" You be like, "Oh, we're like an hour to an hour and a half from Austin. We are we just got our we just got our first Arby's. We they talking about bringing in HEB. HEB still not here though, right? We still local farm, this, that, and another. You'll tell me that. And I say, well, what's your demographics? And he's like, oh, it's about 0.6% black and 94% white, as about 5% Hispanic. I'm like, oh, okay, what jobs out there? Oh, I work remote. Oh, I work remote. Stop telling me about places where y'all live at where there are no jobs to sustain you if you lose your job. Stop telling me about places you live where you can't if you can't go down the street, like literally, if you can't go to a downtown area or a area like outside of that downtown, maybe 20 minutes, where they got some major company where if you lose your online job, your remote job, you could drive to work in less than 30 minutes or 40 minutes. And you'll be at work, and you if you had to drive in, you could drive in. If you are totally reliant on being remote in a job, and I'm saying this with care. I love you, but the reality is this: you need to position yourself where if you had to drive, you could drive. And I know you don't want to go back in. I know, I got it. But if you lost your job and you lived in New Texas, or you lived in New Arkansas, or you lived in backwoods Mississippi, or you live in backwoods somewhere, and you like, ooh, I gotta drive into work. Yes, you do. But guess what? I'd rather for you to have some employment or some money coming in than to be unemployed for 5 years, talking about you weren't going in, and now you gotta settle for something. When you've been unemployed for 2 years and you gotta settle for something, you're like, I just gotta do what I gotta do right now. Well, no, you could have drove in. You could have moved. You could have moved. All right, let's go. All right, lower middle class. This is especially pronounced in two new California cities and Arlington, Virginia. I'm going to say all of the DMV is lower middle class at 150. I'm going to tell you that. Somebody's going to come and put in the comments, Tameika, no, it's not. Here's who I want to exclude with this lower middle class at. If you are retired military and you did 20 years, 30 years, and you get a check, if you get a check from the government, you do not include yourself in this conversation. Why? Because you getting some money, buddy. Sister girl, homie, my guy, my girl, you getting another check from the government. Your retirement, your disability. Do not include yourself in this conversation. Because that's another form of income. We're talking about people that got a job and they're paying 150. Lower middle class. All right, let's go. In most high cost cities, the exorbitant price of basic like housing, childcare, and transportation means that the middle class family find themselves stretched thin financially, even on a relatively high household income. It raises the question about what it means to be rich versus middle class in different parts of the country. Let's blow this up. Leading the way, Arlington, Virginia. I would even go out and push on out and say Loudoun County. I would even say Alexandria, Virginia. I would even say anything in Reston, Ashburn, 150. You just barely scraping by. You barely scraping by. You gonna argue with me and tell me I'm telling a lie? I know. I know. I've been there, done that. You can't argue with me. San Francisco, San Jose, Irvine, Seattle, Gilbert, Plano, Scottsdale, DC, Chandler, is it Chandler? I guess Chandler, San Diego, Anchorage, Oakland, Chesapeake, New Jersey, Boston, Anaheim, Virginia Beach, Austin, Portland, Denver, Henderson, Riverside, Honolulu, and Tacoma are all on this list for saying that up here, $150,000 income is considered lower class in these high cost cities. Yeah, you do need 275, 350 in Chantilly. It says the lower middle class in San Francisco is 91,000 to 151,000. Ladies and gents, your 40,000 and his 43,000 ain't gonna cut it. You're not even lower middle class, right? That's right. Poll 8. All right. If you are making 150 a year before taxes, that puts you in a tough spot to buy a home. The mortgage math simply doesn't add up for the typical middle class family in San Francisco. Monthly payments on a $1.2 million home, even with a substantial down payment, could exceed 5,000 or more, depending on the mortgage terms and the interest rates. This could account for more than 40% of your gross income. Faced with unrealistic home prices, renting is often the more affordable option or the only option for middle class. Sadly, renting isn't much better. With the average rent for an apartment in San Francisco at 3,200 or 30, I should say 3,300, that's about 26% of your gross monthly income if you're earning 150 a year. This percentage is so high, is on the high side, but might be manageable until you factor in taxes, healthcare, living expenses, and so forth. According to Pay Scale, the cost of living in San Francisco is 79% higher than the national average, and the cost of housing is 207% higher. San Jose, 90 to 151. Let's get down to Arlington. Lower middle class range, 91,000 to 152,000. The cost of living in Arlington is 41% higher than the US national average and 121,000 if you take into account just housing. So if you move into Arlington, you might as well go on and get that one that $200,000 job. You're going to need it. Clients I work with in Arlington are seeing the impact with the cost of housing, transportation, healthcare, education, and general lifestyle. While 150,000 may be a comfortable salary for some places, high demand from many people with comparative salaries can create an increased cost of living. In Arlington and similar high cost cities, Griffin believes $150,000 a year puts a household firmly in the lower middle class range when accounting for expenses. Though still a solid income, families making this income must mind a budget to avoid becoming house poor or cash strapped. No matter your salary or where you live, a good financial plan with a solid professional can alleviate any anxiety one may have doubt about on this cost of living. More cities where 100K is still lower middle class, with no other cities quite compared to San Francisco, San Jose, and Arlington. These 12 cities were making $100,000. We're making $100,000 plus still leaves household in the lower middle class. So we're gonna get down here to 100,000. Irvine, California, Seattle, Washington, Gilbert, Arizona, Plano, Texas, Scottsdale, Arizona, Washington, D.C. Again, don't nobody care. Oh, ain't nobody come to see you, Otis. Don't nobody care about your 100K. Don't nobody care about your 100K. Chandler, Arizona, San Diego, Anchorage, and so forth. Everything that was on their list. That 100K don't mean nothing, right? Nothing. Nada. Zilch. Nada. All right. Do you know what the next $1 trillion company they're predicting is going to be the next company that's going to be $1 trillion company? Keep your 100K. You're going to need it. Now, you ain't raising a family of four in Arlington, Texas. I mean, Arlington, Virginia on 100,000. You're not raising a family with a wife, husband and wife, and two kids in Arlington, Virginia. You're not doing that. Nope. Get that up for the man. You're gonna have to go out to, like y'all always like to do, Upper Marlboro. You're gonna have to go out to Upper Marlboro. You're gonna have to go to PG. You know how y'all do up there in the DMV area. Girl, I live in PG County. Girl, I live in PG. You live in PG, but you work in Reston. You live in PG, but you work in Chantilly. You live in PG, but you work in Ashburn. Shit, by the time y'all get through wear and tear on your cars, you might as well just live in downtown. You catch a train. I catch a train. 45 minutes to an hour. Y'all be sitting in that traffic. Mm-mm. I ain't doing it. I don't sit out there. I don't go that way. This the route I take. This why this my favorite too. All of y'all that's in the DMV. I get up early so I can get out of here. I get up here and I be here at 6 o'clock and I leave up out of here about 2 or 3. I leave here early because I don't be wanting to sit in that traffic. So you leave, but then they hit y'all with the company hit y'all with the core hours to worker from 9 to 3. So we need you here to 3 o'clock. Then y'all be like, oh no. Then y'all gotta get the job done. You gotta get work done. So you gotta stay late. Then it be by the time 4 or 5 o'clock, you might well stay to 6 or 7. 150 with a wife and 2 ankle biters in Arlington. We going to PG or Deep Maryland. You got to. You got to. And if you gonna be in Virginia, y'all way past Stratford. Way past Stratford. Because Stratford is congested now. Y'all way past Stratford. Way past Stratford. Y'all be riding in like, ooh, I wonder if I can get a job here in Stratford. You're gonna be traveling all the way from Stratford all the way over to Reston or Chantilly. Man, 2 hours. Traffic. Hands down. Let's look it up. Let me do my thing. Let me see. Stratford, VA to Chantilly. Let's give me Chantilly. Just without traffic. Without traffic on 95, it's 55 minutes. It's 41.9 miles. Let's depart on Monday. Let's depart on Monday. And let's depart at it's already looking bad. Let's say you leave at 7 a.m. This is what your drive time look like from Stratford to Chantilly. Your drive time is 110 minutes. You get there, you'll get to work by 8 o'clock. You gonna be listening to some podcasts. If you leave a little later, say if you leave at 8, trying to get to work at 9, you're pushing it. You're going 7:45, you get to work at 9. So you need to leave no later than 7:30. So you can be at work at 9. Now let's see what it look like going home. It's on a Monday. So you leave work at 5 o'clock. And let's switch it. An hour and 20 minutes. You leave at 5, you're gonna get home at 6:20. Every day you doing that. You 3 hours in the car every day. Cause you gotta get through this right here. This is what you gotta get through right here. You gotta get through the Fairfax traffic. You gotta come through here and get through the Lord and then Woodbridge. I don't know what y'all be doing in Woodbridge. I don't know why y'all be so congested down there. Now you get a chance to ride out. Oh, but wait, there's more. You're like, nah, Tam, I'm in the HOV lane. I pay that monthly toll. I pay that monthly toll. This a 2 hour drive. Okay, an hour and 45, an hour and 50 minutes. Now, how much gas is that every day? You like, I got an electric car. Mm-hmm. You got an electric car right sitting in this traffic. Yep. So when you out here, I think y'all call Manassas Manasty. So people are starting to move out this way. Haymark, Gainesville, y'all out this way. It's still a lot of land out there. I was just in Haymark and Gainesville, Warrenton. Y'all over here. It's this an easier ride in right here. This an easier ride right here. But y'all don't want to be out here. You know why? You know why y'all don't want to be in Warrenton and Gainesville and Haymark? Because y'all can't go to trap bingo. Y'all can't get your quote unquote you can't go to the gym and the gym be see, y'all can't do that. You can't, y'all ain't gonna see no Qs and no alphas and no AKs. Y'all ain't gonna see all of that spinning and jumping, and you ain't gonna get that out there in Warrenton. You ain't gonna get that in Warrenton. You gonna get some land. You gonna see some people going to the big thing out there in them areas is Target and what is it town centers. That's what y'all get, the town centers where y'all go in one big circle, make a loop, park, got apartments, stuff like that up above the restaurants and so forth. So that's what's out there in them areas. Sterling, Dulles, Reston, Brambleton, Ashburn, Leesburg, all up and through here. Y'all don't go on this end. Y'all usually stay over here. Alexandria, Clinton, Upper Marlboro, Wardolph. That's where y'all at out here. Y'all out here. Bowie. You like, I might well work at Fort Meade. Handover. Y'all over here. Laurel. This where y'all at. I know where y'all at. It's y'all area. Even in Germantown. Y'all over here in Germantown. This the side. This the black side. This the transplant side. People who come from other areas, like I want to live near my job. I don't want to go all over there. Tyson's Corner, yeah. Yeah, y'all out here. I know where y'all at. Anytime I had to meet somebody, I'm like, man, I live in I'm in Chantilly. They be like, oh, well, I'll meet you in DC. I ain't coming to Virginia. I don't know. I don't know what it is about y'all, DC, DMV folks. I feel like this is what cracked me up with y'all. You'll come to Virginia to work, but you would not come to Virginia to hang out. Like you'll be like, my car gonna break down once I get across that bridge. When I go across that bridge, it's gonna break down. I don't know if the car be like, you going over there to that Virginia. You better not go over there. You know they gonna get you. I don't know what it is about y'all and this Maryland and Virginia thing. Well, you know they had slaves. They had slaves all through this country. Well, you know how they did them over there in Virginia. Cops in Virginia. Man, the cops don't bother you over in Virginia. That's a myth. That's a myth. Stop it. I hot rodded through Virginia plenty of times. 5:45 just to get to the office by 7. Virginia is quiet. Everything is right there at my fingertips. I ain't gotta go far for everything. Y'all like I could get that in Upper Marlboro. Ain't but 10 minutes away. Upper Marlboro to me look just like Conyers to me. One of my friends took me to a house. He was like, girl, this $1 million home. Me and D walked around and looked at it. We was like, girl, this a great starter home. This a classic. This a Georgia classic. Ain't nothing mean about this. Get this all day, every day. I'm just saying. I don't know what it is. Put me where the property value is going to go increase and they building data centers at. Put me over there. I stay there. All right. So the next $1 trillion company is SoFi. Is what they're predicting. SoFi. Investing in the Magnificent Seven stocks has proven a reliable way to make big profits. Many of these companies, Amazon, Alphabet, Meta platforms, Microsoft, Nvidia, and Tesla, have seen their share prices double, triple, or even quadruple in just over a handful of years. While investing in the Magnificent Seven may still be a smart decision, investors looking for the biggest growth opportunity should look elsewhere. After huge runs, nearly every company in the Magnificent Seven is now worth at least 1 trillion. The exception is Tesla, with a market capitalization of around 650 billion. The mega corporation should continue to grow, but doubling or tripling will be increasingly difficult. So the next one they're predicting is Shopify. Put it on your watch list. Put it on your watch list. The next $1 trillion company, if you're looking for the Magnificent Seven stock, it makes sense to ask why these companies were so successful in the first place. What exactly is the platform for Shopify? What does that look like? They break it down, talking about Amazon, so forth and so on. But put Shopify on your watch list. Shopify is the perfect platform stock. Shopify is an e-commerce platform primarily focused on independent merchants. While Amazon growth relies on merchants using its website, Shopify allows anyone to use its platform for launching their own e-commerce site. Shopify's technology, which includes crucial features like payment processes, inventory management, and marketing analytics, silently runs in the background. So they talk about Shopify here, the platform here, and then they're talking about their growth over time for Shopify. They're talking about Shopify quarterly revenue here in the purple, and Shopify Inc. Free cash flow here in the orange. And since its initial public IPO, Shopify has increased its value by 2,900%. Now $100 billion market cap. It is likely that the company's fastest growth rates are still behind it. Still, there's plenty of reason to believe that its growth can match or exceed that Magnificent Seven in the years to come. So put Shopify on your list if you would like. You can find an ETF that has Shopify in it. But again, I'm just reporting to you what the market is lending and where people are looking at things at. I would probably buy an ETF that has Shopify in it. I don't know if you've been catching the headlines and the issues that they're having with like similar like Bard and Chat GPT with Google, but they're calling for Sudar, I guess Pichai to step down. They want him to step on down. Google is in a tough spot following the public AI snafus. A growing chorus of voices is calling for Pichai to step down. Experts believe Google's search business keeps it safe for now, but may need a leadership change. Who will step in? Who will step in? All right, let's talk about it. It's tough in the Googleplex right now. Search giant already feeling the heat of sudden and fierce competition. The AI has been making some public snafus. Google just hit a pause on its Gemini image generator, which was creating historically inaccurate pictures. The slip up was so bad it sent the company stock tumbling and had Google Pichai, Google CEO, address the troops, calling the situation completely unacceptable. The debacle has strengthened the narrative that Google is settling behind in the AI race, and now there's a growing chorus of voices calling the company to replace Pichai. Ben Thompson, an analyst and the author of the Stractary newsletter, wrote this week that Google was indeed of a transformation that would mean removing those who let the former run amok up to and including the CEO. Googlers and others in Silicon Valley Riley read Thompson's newsletter. Merck, I guess Schmuck, an analyst at Bernstein, has ruminated on whether it was time for a shakeup at the top of the internet giant. The most recent saga only further raises increasingly louder questions around whether this is the right management to team to guide Google into the next era. Google isn't good at rushing. Google combined with Bard slip up, where Google's AI chatbot made stock knocking error in a public demo. Google looks like it's suddenly rushing, and there's a problem. Google isn't good at rushing, thanks to what insiders say is too much bureaucracy and an aversion to harming the search business. Pichai, who was appointed in 2015 and in 2015 and Alphabet in 2019, has proven to be a strong peacetime maker or peacetime CEO. He's been an effective and steady hand to who protects Google prize search businesses and deals diplomatically with regulators. His tenure has been good for shareholders. Google market cap is currently at 1.7 trillion, up from just 400 billion in 2015. The Googleplex, they're still got a status of that. But what are your thoughts? Should they remove him? And if they do, who are they going to replace him with? Who is worthy of replacing him with? Will it be another Indian CEO? Who will it be? Who would you like to see? Should Byron Allen go to be the CEO of Google? Would you pick Byron Allen? Who would be the CEO? We're gonna talk about OpenAI CEO. All right. So even Marissa Mayer, who's was Google's 20th employee ever and worked there for 13 years, got involved in the debate. The respondent to Autumn Larkey, the CEO of Color Health, who said Google is facing an unsolvable problem. Mayor somewhat defended Google. I want them to win and think they can, she wrote, but added they got to get focused on innovation and adopt a challenger or to oppose to a market leader mindset. You're always in competition. Someone's always coming for your neck. But they can come for your neck as long as you got a good team, though. Remember, you can't do it without a team. All right. Cybersecurity company is expanding into Colorado Springs. The average 100 plus jobs in that area is 168,000. I'll round up to 169,000. I'll be fair and say 170. Average job in the area is $170,000. I rounded up. I did. I figured you could squeeze 170 out of 168, 923. Average job around 168. I don't think y'all ready for these numbers. Well, what we're about to go into and what I'm about to talk about, we've already shown you that 150, you are lower middle class. You're about to be swallowed at the lower middle class. Have you ever been swallowed? Right? Right. 168. All right, let me blow it up. A cybersecurity company is expanding into Colorado Springs, bringing an estimated 130 new jobs to the community with an average annual salary of $168,923. You all will argue with me and say, Tameika, no one lives in Colorado Springs. We don't want to go there. I'm telling you, here's an opportunity. Y'all that want to work in cyber, y'all want to get clearances. Watch me. Here you go. Community leaders gathered on Thursday to announce Invictus International Consulting and veteran-owned cybersecurity technology integrator has selected Colorado Springs for expansion. The company will provide cybersecurity and ISP engineering and operations support to government agencies, defense organizations, and private sector clients. Colorado is the leader in cybersecurity, and we are thrilled to welcome Invictus to our great state. Colorado is the best place to work and live and do business, and Invictus will create 230 jobs, new jobs, paying while advancing the aerospace defense contracting. And so the average is 168,000. The Economic Development Commission approved the $2 million or 2.1 million in performance-based growth incentive tax credits for the company over an 8-year period. So 8 years, making an average of $170,000. 8 times 170 is what? That's a roughly about a meal. Roughly about a meal. Do 170. I'm only averaging here times 8. 1.36. 1.36 million. So 8 years, you're making 168,000 in Colorado Springs. What is in Colorado Springs? Oh, should you pray tell and ask? Let's go look at high to low. Let's remove boundaries. Let's come here, only do houses. Let's apply. All right. So that's on the high to low side, right? Now let's go low to high. Let's filter 3 to 2, apply. All right. So that's on the low end. These are like look like trailer homes. So let's start going up. I could make a minimum square feet, but I just want to see, what's out here. So you get a chance to see. You probably have to pick an area. 4.2 at 289, 1,700. Pueblo. You could probably get into the Springs area, probably closer to the base. But again, 300,000 for a 4-bedroom, 3-bath. You'll probably get, like I said, get closer to the base. But you got some wiggle room. You could live. You could ride out. Let me go down here to this 360 new construction. Right? I got different models for new construction. 3-bedroom, 3-bath. Not bad. You can take your family out there. Family of 4. Get you a house. Right? And all I'm saying is go create some stability. Go somewhere where y'all can create stability. If you know that you can make on average, that's average. Remember the average, right? It's the sum divided by the total. The sum divided by the total. The median is what number falls in the middle of those numbers. The average, they saying the average, meaning that there's more. Wait, there's more out there, and then there's some that are lower. But on average, you're around about 170,000 in a place where it's not as expensive. You spend, I don't know, 5 years out there, make your money. Let's go look at Invictus, the company itself. Here's the company. They focus on zero trust, which is a big DoD initiative, really a big government initiative. Why Invictus? Let me see. Join us. Our story. Zero trust, program management, infrastructure, engineering and modernization. Location, our leadership team, mission and values. I want this. I want their benefits. Okay, so here are their benefits up front. So they got, the basic insurance, paid leave of absence, unpaid leave of absence, 401k. Here we go. This is what I want. This is what I be wanting. This is what I tell y'all want to see. Invictus provides employees access to participate in a tax-deferred savings investment account regulated under federal law. Invictus will match 50% of the employee's contribution for the first 6% of the salary that an employee contributes to the plan. All regular full-time employees are eligible to participate. Tuition and reimbursement. Invictus will reimburse eligible expenses up to $5,250. Tuition require materials are successfully completed coursework, so forth and so on. Professional development and training. Certain training events may be eligible for reimbursement, so forth and so on. This is what I wanted to see right here. Is what their 401k looks like. Right? What their 401k looks like. Of course, you probably will be the only one. Let's look at their leadership team. Jim Kelly, Varro, Nicholas Anderson, April Jackson, Chief Administration Officer. April Jackson is a solution-based, results-oriented professional with the thorough knowledge of federal acquisition regulations with over 20 years of progressively responsible work experience. April is a subject matter expert in the field of government contracting. Right? April has a master's in business administration from Mary Washington University and a bachelor's from the University of Virginia. She was like, the DMV, I'm out. I'm going to go make my money. She's also an enthusiastic traveler who loves to explore and immerse herself in different cultures. I should get April Jackson on the show. We need to get April Jackson on the show. We need to reach out to April Jackson. April, tell us more about Invictus. And she has been there, look like it since 2014. She probably got equity in the company. Right? So again, you see how I just went through the company? Right? I'm looking for the benefits. Then the next thing you should be looking at is what awards have they gotten? What does their social media presence look like? You want to know what they look like. You want to see what they've been doing, where they at. Where they at, though. You want to know. Now you can hit open positions. Now you can see what they're hiring for. Now you can see where they at, though. They got some stuff in Maryland. They got some stuff in Virginia. Colorado Springs. But you know Colorado Springs What is the average salary they're hiring for in Colorado Springs? 168K. 168K point 168.9. I just say 170 for you. Easy. And you know they hiring in Colorado Springs. Bet money you will get a job easier in Colorado Springs than you would in DC. And they probably pay for relocation. Cybersecurity subject matter expert, TSSEI, is open until filled. It was posted back in August 24 or 2022. They're looking for about somebody with TSSEI. Do you have your security plus experience working in DoD? You got to see a TS with a CI poly. You understand, may serve as a technical consultant to a number of projects. They want you to know your security stuff. Boom, there you go. It's been open. A cybersecurity subject matter expert, functional expert 4. You can here's a caveat about Colorado. They have to tell you the range in pay. So you can ask that question without feeling like, oh, I better not ask that. Just showing you where the money's at. If I'm a cybersecurity and I'm looking for a job and I ain't scared to move, I'm gonna go apply for one of them and take the hit. Here's the one thing about living in the United States. You can always catch a plane, train, or drive. If you feel like you lonely, you can catch a flight. If you're feeling like you don't know where to go or what to do, drive. All right. I don't want to talk about that one. Mm, mm, mm. Hold on. I know what I want to talk about. Let me get rid of this stuff here because we're on cyber. I want to talk about this. Type Top cybersecurity salary shoot past 780K. Top cybersecurity salary shoot past 780K. What has been the theme today? Quantum and cyber. Cyber itself and stocks. I've shown you things that give me 20%, and so forth and so on, and how to invest. Let's go. D, they quiet today. They quiet today. I ain't never seen nobody this quiet before in my life. D doing more typing than y'all. Mm-mm-mm. Y'all, are y'all writing? Y'all writing down stuff? I don't know. I don't think they writing D. Yeah, crickets. Mm-hmm. All right. The top 10% of cybersecurity professionals in the US drew as much as 783,000 on average in 2023, according to a joint IANS and Article Search study. I don't know if you listening. I don't know what you doing. I don't know what y'all looking at, but here we are. Although well compensated, cybersecurity roles are often multifunctional. And typical functional combinations include IAM, application security, AppSec, and product security. The study, which is based on responses from 563 security professionals from April of 2023 to November of 2023, primarily surveyed cyber security analysts and security managers working in finance, health, and technology. Finance, health, and technology. The global cybersecurity talent shortage is a perennial issue. In the US alone, there are only enough qualified cybersecurity professionals to meet 72%, which is hovering around a 10-year low. Unfortunately, the labor market supply and demand issues in cybersecurity will not be solved anytime soon. Security roles are well compensated. Cybersecurity directors, managers, architects, engineers, and analysts are well compensated. The top 10 to 25% having an annual salary, having annual salaries considerably higher than the median for their roles. Pull it up a little bit more. All right. The top quartile total earnings across the various roles in the sample area are considerably higher than the median pay. In many cases, the top 10% average is as much as 3 times the median total compensation, indicating a significant pay band within each of these roles. For cybersecurity directors, the total annual compensation was $330,000 on average, with $250,000 being cash compensation they receive annually. The compensation was at $402,000 and $325,000 for senior directors who are more experienced and who have a larger span of control compared to directors. Salaries continue to increase for security professionals. Stefan again. Not much of a surprise, especially given those professionals have to have expertise in a variety of IT and GRC disciplines, thus making it much more difficult to find qualified resources. The top 25% compensation for senior directors was found to be $424,000, while the top 10% drew as much in as on average as $783,000, more than double the median for the role. Cybersecurity architects, managers, engineers, and analysts were 256, 183, 174, and 118. So that means the architects are at 256, the managers are 183, the engineers at 174, and the analysts were at 118, which included an equity value component ranging between 15 to 40% of their basic salaries. Security domains were revealed by carrying gender diversity, with respondents self-identifying females accounting for 40% in the GRC roles, 25% in the IAM roles, 19% in AE, and 10% in SecOps roles, evenly as the pay gap persists on average by 7% and increases with experience. Money comes at the cost of demanding, right? Among AppSec staff, 74% contribute to the product security, 67% contribute to the IAM security. I'm looking to see if they gave the organizations, and they don't. They don't give the organizations. They just talk about the roles. I guess they're keeping that anonymous. But 780,000 is what it shot past in 2023. I guarantee you, when you start adding in quantum and so forth, that's going to increase even more. So let me close down the articles that we have read. Do. Did I read this? Yeah. I didn't talk about flying vehicles though. Smart cities, flying vehicles, robotics. I didn't talk about those. Okay. So we are here. Let me look and see if anything else on my list that I really want to highlight today. I probably have to get to some of this next week. I did want to talk about that though. Um, Let me grab it because I do want to mention that. All right, let me grab that because I do want to talk about this. I just want to see your opinion on it. See where you at. All right, let's close this. Did the data centers pipeline, SMH, close that, and close this. Do. Yeah, we'll talk about that one in a minute. Let's talk about this right now. I want to see where y'all at with this. Want the IRS to do your taxes for free? They have a direct file program that will be available in 12 states soon, and the IRS could do your taxes. Would you let the IRS do your taxes for free? Thank you, Aunt. You don't have to go to Charles. You don't have to go nowhere. You don't have to get a CPA. Nothing like they'll do your taxes for free. Would you let the IRS do your taxes? The red file marks the widespread debut of a free government run answer to mass market online tax preparation from commercial providers like TurboTax and H&R Block. The IRS service free tax prep platform will soon be open for business after slowly increasing capacity on its direct file platform. The IRS will make the platform available to a wider audience on Monday, said the agency. The platform is expected to be fully up and running on March the 12th. The pilot program can prepare relatively basic taxes and will only be available to taxpayers in 12 states: Arizona, California, Florida, Mass, Nevada, New Hampshire, New York, South Dakota, Tennessee, Texas, Washington, and Wyoming. But direct file marks the widespread debut of free government run answer to market online text preparation from commercial providers like Turbo and H&R. Regulators of the Federal Trade Commission have alleged that both TurboTax and H&R Block misled consumers about the extent of their tax-free preparation services. Both companies deny allegations. There are other free tax filing options out there, but including the IRS Free File program. That's an IRS partnership with tax software companies available to taxpayers now with incomes of up to 79,000. The IRS direct file program has no income limits, just like the free tax prep programs for H&R Block. But all three can only be used for certain types of tax returns, mostly simple ones. The IRS slowly rolled out the direct file, making it available to taxpayers for certain hours of the day. Starting March 4th, it will be available to new users 24/7. 24/7. Hey, I'm not trying to beat you. I'm just trying to show you where the money is at. Right? So, would you let the IRS do your taxes for you? Hmm. Some people say no. Some people say no. I don't know. I don't know. I don't know. I don't know. All right. Where the money at? Lockheed Martin gets a $663.1 million contract modification from the U.S. Department of Defense, DoD, working with the F-35 and the Joint Fighter Air Systems Fighter. They have this contract. It is performed out of Fort Worth, Texas, and Orlando, and is expected to be completed by 2027. So you got 3 years on this contract. The company is also getting 170 million modification for Texas indefinite delivery (IDIQ) and 109.3 million cost fixed fee in Florida for the Trident II missile reentry subsystems and common missile compartment. Right? You want to know where the money reside? The 663 million that I just talked about right there. Contract money. That's the IRS joint right there. Here we go. Boeing confirms talks with Spirit Aerospace and it aims to improve quality. A deal would not be near-term fix for Boeing, analysts say, but Boeing late Friday confirmed talks about buying supplier Spirit Aerospace Holdings, saying such a move would strengthen its aviation safety. Boeing had said it has been primarily in discussion about making Spirit Aerosystems part of the company again. Boeing sold assets from that became Spirit Aerosystems in 2005. We believe the reintegration of Boeing and Spirit Aerosystems manufacturing operations will further strengthen the aviation safety, improve quality, and serve the interests of customers, employees, and shareholders. The aerospace and defense company said shares of both Spirit Aerospace gained in extended session Friday. Spirit Aerosystems shares ended with the regular trading up 15%, and Boeing's shares closed nearly earlier, 2% lower. So, would you like to see Boeing and Spirit Aerospace Holdings back together again? Right? This is one I want to talk about. A massive drain is looming as boomers and Gen X's retire. They should include millennials into this as well too. And they're calling this new thing, call it flex retirement. Flex retirement. All right. To help workers and business. All right, what are we talking about here? But what the heck is flex retirement? I spoke to some experts on the topic. Neil Costa, the writer of the Fast Company article, and the one who coined the term flex retirement. Cher Evans, director of Milken Institute and co-author of the paper titled "Shifting the Retirement Paradigm," and Jack, I guess, Tornicki, an employee benefits specialist and author of the Benefits Quarterly article titled "Aiming at the Wrong Target: What's Holding Employers Back When It Comes to Older Workers." It says Costa is saying, who is the chief executive officer of the digital recruitment marketing agency, says flex retirement program can be enticing to both employers and to older workers. He came up with the term, and when he and colleagues were talking about how to make jobs of their 50-person company more feasible for workers near retirement. One of those workers has now begun the flex retirement or flex retirement, and another is in the process of starting one. When we work on normal retirement, often it's a on and off switch, and it's someone checking out and going off into the sunset. We're trying to define a new employment status where you're still an employee and still can take advantage of benefits and still have more intimate relationship with the company. The employees' flex timer will let them continue working part time, perhaps on one of their employee key initiatives as a mentor, possibly remote. For business, nonprofits, and the government does this already. You could do a retirement. I think you can only go back for like 2 years and you be part time. I think you may be, yeah, I think you may be part time, but you'll be in the office doing 15 to 20 hours and you still get your benefits or something like that. The benefit will be that they keep their valuable experienced workers longer, mitigating catastrophic knowledge gaps and empowering the younger generations and so forth. So you get the best of both worlds. You still get the mentorship and the knowledge, and they still get some type of income coming in as well too, right? So I don't know what that looks like in some of the smaller companies, but I can see that happening in much larger companies. I can see that happening in much larger companies. All right. The U.S. Patent Trademark Office announces a $70 million contract for AI patent search tool. USPTO intends to negotiate and award a contract to Essential Federal for its patent artificial intelligence capabilities. This is to do AI and patent search as well. So here we go. The notice of intent is described the need for the contractor to provide a full system development effort to continue for PSAI capabilities and provide new enhancements for the component. USPTO anticipates negotiating and awarding this responsibility to AFS. AFS, I know AFS, by April the 1st. So those that are looking to work on something like this with AI and the US patent and search, look at ASI and essential federal services. All right, let me double verify. I got through most of my stuff. I didn't get through everything. I'm still looking at the I still got 14 yield investments to talk about. We still got the Reddit IPO to talk about at 6.5 billion. Um let's look and see. We got climate change to talk about. Uh, I also have a guide in here on how to be a successful security officer and those jobs that are 780. I actually put together a guide on how to get to those jobs. I probably have to say that for Monday. Let me look here. I'll do one story and we're out of here. Let me look at this. I don't remember what this was. Oh, I remember this. I remember I was going to talk about this. I'll save this. We'll save this for another day. All right. So we have one petty T moment. We're going to have one petty T moment. I think this is a good one. We'll pick one. You said, have you seen AI driven system by IRS using to catch fraudulent? Yeah, I have. They have been working on that for a minute. I don't know. Do y'all want a juicy story or you want a story about helping you prepare for retirement? I don't know. Juicy? I don't know. You tell me what you like. Whatever you like. A black dub 21. I don't know what no means. There's no means juicy, no means retirement. D said you. Okay. Okay. Juicy it is. Let's go. All right. Let's go. I borrowed $20,000 from my mother in 1996, but only repaid 5,000. She deducted the entire loan from my inheritance. I need that money. What now? I'll read it again. I borrowed $20,000 from my mother in 1996, but only repaid $5,000. She took that out of my inheritance. I need that money. What now? The mama said, "Oh, in 1996, you borrowed $20,000, and with interest, I'm taking the whole 20 out your inheritance." Is the mother wrong? Is the mother wrong? Is that fair? What kind of mother is she? How dare she? But it's the money she set aside for the inheritance for her child. It's not really her money, is it? Is it really her money? Is it really her money? Is she being an Indian giver, as they like to say? I'm pulling through and making sure that this is the only one I have pulled up. All right, let's go. I think that was it. All right. We sold our late mother's house last year for 600,000. The equity was supposed to be divided equally by us four siblings, 146,000 each. In 1996, I borrowed $20,000 from my mother interest free to help buy my condo. I promised to pay her back in 2 years. I managed to pay her back $5,000 in 6 months. But I made terrible decisions in my finances and I lost my high paying job. My budget couldn't afford to pay her back. I was terrified to tell her. She was extremely angry at the time, so she deducted $20,000 from my inheritance. Long story short, I defaulted on my mom's loan. When my mom made her will out, she produced my letter from 1996, which stated that I did not repay the loan. This is the only evidence of the transaction. I want to have the CPA redo the taxes to show that I paid part of the loan off. When I called my sister, mom's power of attorney, she was so upset. She said, "F you never talk to me again." I was shocked. She has never talked to me like this. She never talked to me this way in 75 years. I understand her anger because this is a mess. She's a hero for doing such a wonderful job as a power of attorney. I'm too upset, but I need every cent of my inheritance. I live in a semi-expensive assisted living facility and I am not in good health. On top of that, Medicare only pays part of my health bills. Do you have any suggestions on how to fix this mess without having to redo our taxes for 2022? Cash strapped son. This is a guy. This is the cash strapped son that said he defaulted on the loan for that his mom had gave him. He paid back 5,000. He made some terrible investments in finance. I don't make this up. I don't report this. I'm not bashing the guys. I'm just letting you know it's a guy. All right, fellas, let's go. Let's see where y'all at. Quentin says, you're digging a dry well. I'm sorry that you lost your job during the peak yearning years, but given the timeline involved, it's hard to accept you could not have repaid your mother $15,000 over 28 years. I couldn't do it. I didn't have the money. Right? It's time to get real and acknowledge your part in this family drama. This loan could have been priority for your budget. If you gave your mother $50 a month over that period, that loan would have been paid for before she died. Your mother lent you this money almost 30 years ago, but did not record it on her tax return. As such, it is most likely considered a gift by Internal Revenue. In 1996, the annual gift exclusion was 10,000. So your mother effectively gifted you twice the eligible amount. Given that your mother passed away last year, it seems like the boat had sailed, buddy. If you wish to amend your mother's 2022 tax return, it's years too late. And if you think that amending your mother's return will restore your full $146,000 inheritance, you're sadly mistaken. She appears to have left a will stating that she wanted $20,000 deducted from your inheritance. And you can't undo that by adjusting your mother's tax return. You from what you write in this letter, it seems like your mother effectively gifted you this money, at least in the eyes of the IRS. When someone lends you money and doesn't charge you interest or charges a below market rate compared to the IRS current applicable federal rate, the IRS may consider this loan a gift or require them to pay income taxes on imputed, I guess imputed interest. It was if this was an official loan. However, the IRS requires a bad debt statement explaining the details. You must deduct a bad debt in the year it becomes worthless. If you realize you have reported and taken a deduction for an unpaid debt years ago but didn't, you generally have 3 years to amend your return in order to claim it or on your tax returns. If that is the situation, your mother would likely have been able to deduct a bad debt from your unpaid loan. In a short-term capital loss, you must first deduct it from short-term capital gains, and capital gains you have before deducting it from long-term capital gains. You can deduct up to 3,000 of any remaining balance from their income, but that's all one under the bridge now. A decade-long drama. Rather than think about that you are old, look at it from the family's perspective. You're the one who defaulted on the loan and a promise. That $20,000 is equivalent to nearly $30,000 in purchasing power in 2024. And that doesn't count for equity your mother invested in your home, which likely appreciated by the time you sold it. No one has done you a bad turn. Not your sister, certainly not your mother. Perhaps your sister frustrated that the years have that this loan went unpaid. You attempted to cause her more work by recording this $5,000. That amount is chump change in the larger scheme of your inheritance. Your mother helped you financially when you were buying your condo. Don't turn this good deed into a 3 decade long drama. You know that you paid off that part of the loan. You don't need the IRS for recorded by the IRS. Your sister is probably less annoyed by the fact that you did not repay the rest of the 20,000, and more frustrated by the fact you're trying to turn the bad debt back into 1996 into a payday to wake up your mother's in the wake of your mother's death. It's hard. It's a hard story to sell, and it's not fair. You missed on your $5,000 in your mother's will, and when you failed to pay back the 15,000. Focus on what do you have in your life and make amends with your sister. So he want to go back and get the full 20,000. He getting 126,000, but he said he need all his money. And his mama was like, he don't get all of that. Give that to the rest of them kids. I'm gonna divide that up with the rest of the kids. So I bet you he done called all of them and been like, you ain't supposed to have that. That's my money. I bet you money he done called everybody else. He said that's a damn shame. The high paying job, he should have been able to put $500 away monthly. Yep. He have no pity for the man. Aunt don't be that way. Estelle said she knew her son was trifling but gave him a chance anyways. D talking about he must be the baby. He must be the way. He must be the baby. Let me see. I wonder if there's an update to this one. The one with the trust. I wonder if they got an update. Let me look and see. Updated on February 25th. I talked about it what last week? Was that February 25th? It was updated on Monday. It's got 48 comments. Let's go look at the comments. Let's look at the comments. Let's see what they're talking about in the comments. I'm shocked. Did I read that one spouse can take joint assets and lock them off without the other spouse's permission? That seems crazy. You're dangerously close to being penniless, in my opinion. Sounds like you've been seriously taken advantage of and better smarten up fast. Divorce. He's a snake. In the end, you're probably host. For your marriage, the minimum requirements are communication and respect, and those are gone. Unfortunately, you are correct. He is moving on without you. I read the subtext fluently. When confronted about the trust, he said, I assumed you would be okay. If he really believed that you two would have had an honest or an open conversation followed by a planning meeting with the attorney. So quietly have a free consultation and every divorce attorney in a county. This is an example of why not to get married later in life. Stay single. Save the marriage. Looks like that ship has already sailed. She needs a very sharp lawyer that will fight like a mad dog. Quitting is right. There's no trust with this type of financial infidelity. And that lawyer is the next step. In addition, you may be able to file a complaint with your State Department of Labor and Social Security about non payment for a role that should have been considered a full time position. At least your so called spouse may be fined and have to make FICA and state federal income tax back payments. You could also have been eligible for unemployment when the role was ultimately removed and you effectively lost your job. Plus, a financial crime may have been committed if he fraudulently set up a trust. You may want to talk to a prosecutor or the police about the steps here. Don't be shy about laying claim to your marital property and half of your husband's retirement accounts as part of your divorce settlement. Good luck. I like that. I like that. I like that. I like that advice, right? Because she quit, right? She quit her job and she been unemployed for 10 years. So she don't have no social security at that. And I'm assuming he's self-employed. So she can't get half of his social security at retirement. So she don't have nothing. And he took their marital assets that she helped find and helped purchase, and he rolled it all into the trust and gonna leave it to his kids. Ain't no way. I'm like, what's her name? Aretha Franklin. Ain't no way. He knew you would not agree, so that's why he did it behind your back. He lied about arguably one of the cornerstones of marriage, financial security. You're second to him and his family. Can you live with that? My advice is to give him a chance to reverse what he has done and address the fact that he has committed several legally dubious actions, and then agree to a postnuptial agreement. If he refuses, then find a forensic CPA and lawyer and address it legally, including divorce. Absolutely not. Giving a husband any chance, as it will prompt him to hide more and hide better. She needs to collect all the financial records, and every asset belongs to her and to the both of them, starting with those assets that were first acquired. She needs a lawyer and a forensic accountant at minimum. Looking into his children's assets. Ooh, looking at the children's assets. I agree some information is missing. As when they were married, he was 60s he was 60s, and she was likely in her late 40s or 50s. She worked for 5 years in their 10-year long marriage. How could she be this oblivious? Things just don't add up. Run for the hills, run for your life. Take what she deserves before running. She needs to first talk to an attorney about her rights and what should be done now to make corrections before approaching the husband. Yeah, she can't talk to him because he just gonna lie to her face. Yeah, he already shown his character of low morals. He ain't to be trusted. Mm. Sounds like he got burned in the first divorce and he is not taking any chances with you. Over 70% of the second marriages ended a divorce. This is not just him taking chances on her. This is him taking advantage of her. Being burned before is no excuse for dishonesty. Mm-mm. And yes, he does. He forged the signature. Remember, he forged the signature on some of these on the deeds. He forged the signature. I'm glad we got a chance to read the comments. I want to see what this one goes. I'm gonna watch this one. I'm gonna watch this one. I want to see what this one. I wonder what state this was in. I want to see where that one goes, because honey, that one right there was juicy. The way he played her, he played her. Yeah, instead of having high level job with bonuses and accolades, I ran one of his companies with no pay. I also drove his daughter's carpool, allowed his adult son and his adult children to move in with us, and ran our home in a smooth and efficient manner. I acted as a good steward of his assets so he could maximize his retirement investments. I also added substantial assets to our portfolio with my hobby of real estate investing. I'm a team player and thought upon retirement we would live the life we dreamed about during the early days of our marriage. I expected he would retire at 65 and we would travel the world. Our portfolio is worth 10 times what it was when we were married. His retirement account and several IRAs were opened after we were married. Scandalous, folks. Scandalous. You never know what's happening behind the scenes. Always check them deeds. Do a check. Hey, listen. I don't care what y'all talking about. I think now, if y'all married over 50, y'all better be checking them assets every month. What's going on with the assets every month? Did you change anything? You still love me? Did you go write a trust? Did you get trust? You better. Hey, I wonder if you can have a forensic accountant on standby. Like, ooh, just get one on standby. This is scandalous. I just want to see what they was saying about it. You never know what was up people's sleeve. You never know how people gonna feel about you. You never know who in their ear. You don't never know, right? You don't never know. But folks, it's our time. I almost made the 3 hour mark. I actually got stuff for probably about 4 or 5 hours. We ain't gonna do it today, but you understand where the market is going. Don't forget to read about those. Don't forget to read about Van Eck. Go read about Van Eck. Go look up SMH. Put it on a watch list. Semiconductors. I gave you that. Go look at it was the other one was SOXX ticker symbol SOXX. Remember, SMH is heavily in Nvidia. SOXX is a little more evenly distributed, so it helps against some problems Nvidia may have. In SMH, Nvidia is 22%. Inside of SOXX, it's 9%, like 9.6% or something like that. So you again look at and compare the ETFs, look at the performance since inception, look at the performance for the 10 years. Um, hey, you have options out here to get into these ETFs and see what's performing. You can look at anything that's performing anywhere from 10% on the low end to above 20%. There are others out there, same way with mutual funds. Remember, mutual funds try to beat the stock market versus index right alongside of it, right? Mutual funds try to beat. That's why you have those fees inside of mutual funds. But again, you all know this because you heard about me talk about this before, and I don't need to tell you this no more. You got it. All right. All right. I appreciate y'all. Y'all have a good day.